Stanford also does a pretty terrible job of telling us how our tuition is being paid. Some of it will come from our advisors, some of it comes from dean, some of it comes from this entire like weird hierarchy of people that it's very hard to get a handle on. So like I know that my fellowship contributes like some part of that, but then like there's all this other tuition that's paid by other people.
Okay, so what I would say to that is give the good people in student financial services a call, an email, or what have you, with respect to trying to get that information, because in the end, it's you're responsible for reporting it as accurately as possible on your return. I've got to move on for now. All right, state taxation, another issue that I wanted to cover here with respect to student tax issues. So. There are all kinds of interesting things here. You know, the easiest to say is, you know, if you live here in California and you're here at Stanford and you're working here at Stanford, congratulations, your income is taxed. Your income is taxed here and you only have one state to file in. That's the simplest case, right? But suppose that you live in Massachusetts, or your family home is in Massachusetts, and you come out to Stanford and work here. When you work in a state, that state is going to tax that income as sourced in that state. So even though you may not be a resident of that state, you will still have to pay income taxes in that state on the income that you've earned there. You may, if you are also a resident of the state of Massachusetts, you may then also have to pay tax on your entire worldwide income, including the stuff that you've earned at Stanford. But fortunately, many states allow a tax credit to prevent what would otherwise be double taxation. So you should look at that as and when. When are you a California resident? You're a California resident. I define you as a California resident if you are here for other than a temporary or transitory purpose. So, you know, at the graduate level, it might be, again, I'm not providing tax advice, you got that in the front, but it might be easier for you just to conclude that you're here for a permanent period of time and are a California resident for this particular time. You're going to get stuck with California taxation either way on the money that you've earned here. But again, I'll just offer that as maybe a simple way for you to think about the problem. But in any case, if you wish to maintain your residence in another state for whatever reason, then you're going to need to deal with California on these earnings, as well as whatever your own state taxes might be. Yep.
If you're not earning money in California, do you think it's better not to become a California resident? Yes. Like if you're here literally just for school,
and you're not earning, you're not on a TA-ship or an RA-ship or a fellowship that's...
Besides like interest income that's coming in,
well, you know, in that situation, and you live in another state and you have ties to that other state and you fully intend to go back to that other state, then yeah, don't become a California resident. Especially in states like Nevada or Texas where you don't pay any tax. Yeah, yeah. Yes, you do. Yeah, you'll have to pay. You would, because again, this money is sourced in the state of California, so you will need to file the same forms that others would be filing. You can, in fact, be a California resident and not a United States resident at the same time. You can be. Yep.
I've heard that some of the fellowships are not taxable in California. Is it true?
Well, generally, the California conforms with feds. You know, I do not know of anything particularly that you're describing. In general terms, whatever is the law for the federal government follows here for the state of California, with a few exceptions. Okay, so we took care of states. Let's plow on. One more that's there is the employee versus independent contractor question. So employees, you're going to get withheld You're getting withheld for your federal and state income tax. You're getting held with Social Security tax. And so that's all being, taken care of out of your paycheck. If you qualify as an independent contractor, then all these taxes are yours to pay, everything. So you're having to pay your income taxes through estimated payments. And then there's one other little piece, and it's called the Self-Employment Contributions Act, which is effectively your Social Security. And your Social Security rate is, since you're paying it all yourself, is 15.3%. When you work for Stanford, or any other employer for that matter, you're paying $765, and the employer is matching. But in the case of self-employment, nobody's matching, and so you're paying the entire 15.3% on your own if you're in your own business.